Good morning, ladies and gentlemen, boys and squirrels. Welcome back. Good morning, good morning, good morning. Well, looks like we got some 10 a.m. economic data. What is that one coming in today? Personal income, a PCE, core PCE, consumer sentiment, all again coming out at 10 a.m. So 10 a.m. there's going to be a shock to the market. Whether that be up or down, don't know. Don't really care. But there will be around 10 a.m. a little algorithm move on the market. So we'll see how that all shapes up. For the time being, stock market is still in a buying operation. So pretty much that just means that we're still long bias the stock market overall. We're in a swing long market still. And even today's pullback in the pre-market session is not enough or not a big enough pullback to change the direction of the volatility markets. So I would say the stock market isn't bearish for the time being. We're still not bearish as far as the swing market goes. So any sort of short-term action down it's still just kind of day trading, market volatility to the downside. But yeah, I mean, to put it simply, market is still in a buy move. All right. We will transition bearish the market when we're told to do so. We have not been told to do so yet. So we're going to stay on the long side of the market. Okay. What does that mean? That just means, yeah, we're not bearish. Does the economic data that comes out today at 10 o'clock change that? Maybe. Maybe not. Don't know. But yeah, so it's the same thing as it is, same thing as it always is every single day. We're going to pretty much wait for the stock market to tell us to be bearish. If not, we're just going to keep riding up the long on the stock market. There's been a decent amount of kind of stuff popping up today on some penny stocks. But yeah, so. What else we got going on? Yeah, I mean, again, like it'll be interesting to see what that data does today or how the data comes out, so on and so forth. What it does, I mean, generally speaking, my first thoughts are pretty much whenever we're in a buy signal or the market's trend is positive, I just assume that whatever the data is always going to come out more of a positive manner. That's how I just always assume. And it usually leads to, I would say, being correct on the direction of data more often than not. So yeah, to put it simply, we're in a buy move as long as that's the case. I usually just kind of think to myself that data is going to come out positive. So yeah. Now, if the volatility index were, elevated in a way that would say the market's fearful or expressing fear, then I would be like, okay, maybe data is going to come out kind of crappy. But yeah, until that happens, I always assume data is going to push the market up when in a buy move. So yeah, so I'll bring up the VIX real quick just so you guys can kind of get a visual representation of what we're discussing right now. But again, nothing super fancy, nothing, too complicated here. Interesting. Hold on one second. I'm going to run through a couple of these. All right. So yeah, real quick, we'll just kind of run through the volatility index. So right here, we know that the VIX went into a downtrend back here. All right, so downtrend. It's been failing to get above the trend, so the market stays down. If the market were to get above that SMA trend, we would then look for volatility and fear to increase, at which point we would look to be more aggressive on pulling the stock market down. But right now it hasn't happened, so we're still looking at dip long up in to put it simply. Now, at any point, the market can always change, and all these dips could fail at some point, but it's when the expression of fear enters the market, we'll think that. Otherwise, it's going to get bought up in the dip. All right. So let's go and look at where that is a little more closely. We zoom in. The price point is right at $16.50. We're going to go to a pre-market chart now. So now let's go into a pre-market. So you will see that the price point is all the way up here. We're trading down here. So we will not look to be extremely bearish the market unless we were actually breaking out the price of $16.50 now. All right. Now you also must understand, with all breakouts, the market must first go to, right? So you just heard me say, we won't look to be bearish the market until the market breaks out the VIX, right? But at the same time, in order to break out, it has to go all the way up there. So we can even see, markets pull back while we're just moving the volatility index up to its breakout, right? So that's another thing that kind of happens, and it makes me feel kind of silly when I talk to you guys a little bit, because we can see these kind of good market pullbacks even though the VIX hasn't fully broken out, and a lot of times that's happening as the VIX is moving up to its breakout level, if you will. So to put it simply, we're still just long bias the stock market. It is not bearish. The volatility index has not signaled us to be bearish. I don't know about the VVIX. I haven't really looked too closely this morning, but I'm assuming it's not positive. Yeah. So if we look at the VVIX from yesterday, it closed in bearish territory. So therefore, there isn't really... Now, that could change going into today because we don't have any sort of pre-market activity when we use the VVIX indicator. There is no data in the pre-market and early hour sessions. So for us to kind of gather any sort of insight from that specific market, it will happen at the open. So we'll look a little closely at VVIX as we get to the open, but for the moment, there's no expression of fear in the market as it relates to the volatility index, and if that's the case, it's going to be very hard to pull the market down. Not to mention the volatility index is now trading, well, this morning to a low of $15.55, which basically means the volatility index is now priced low, right? So there's really no fear in the market at all as it relates to pricing of the VIX, right? So that's another thing too to understand is that there's somewhat of a disconnect, I think, in the market. What I've come to realize over the past couple years, and that is if the volatility index is low, that obviously, like priced low, then obviously there's no fear in the market. I read fear in the market in two ways. One of which being a high priced volatility index. Obviously, if the stock market gets smoked and it goes down, then obviously the VIX goes up and it can be priced all the way in the 20s, 25s, 30s, 40s, etc. That's a very high VIX. Market is very fearful if you're just going on it based on a scaling of pricing. All right. But the other way that fear enters the market is by the trend changing, right? So we can see fear come into the stock market and fear come into the VIX while it's priced low, but that's when it's changing trend to positive. So, a lot of people might go, oh, the VIX, like I just said, is down at $15 today and $16. It's not a really fearful market. That's true. But it could become fearful even though it's priced low. So that's another thing that you have to understand is just because the VIX is priced low doesn't mean that it can't be fearful in a low priced environment. It can, and it does. And that's the repeating process, right? Volatility markets during corrections and can run all the way to $50 or 50 points, right? Or whatnot, as reflected by volatility, right? You can run all the way out of the 50s. And then the market recovers and whatever goes back to all-time highs. The next thing you know, the volatility index is all the way back down to say where it's at today, like in the 15s, right? So someone's like, oh, it's not a fearful market. Well, that's true. But as soon as the VIX starts to break out on the 30-minute, then fear is coming back in. So you could be priced all the way down at 13 on the VIX, right? You could be priced down at 13. I keep wanting to say dollars, but it's not really dollars. But you could be priced all the way down, say, at 13 on the VIX, okay? And then all of a sudden it flips back and starts to gain positive momentum as it relates to trends changing. And next thing you know, you'll start to see the market slip. You'll see these volatility pullbacks. Though it's not extreme volatility, that's the start of it, right? So just know that low VIX doesn't mean that volatility can't happen. It just means it won't really start to truly happen in a low priced environment until we start to gain traction over that 30-minute SMA. So, to put it simply, we're still just long biased the stock market. There is nothing in the stock market today, nor from yesterday, that gave us a true expression of volatility, which basically means nothing told us to really be extremely bearish. Though yesterday we did mention you should be slightly cautious in yielding on the market today. Why? Because there was some degree of hedging going on in the marketplace, which basically means hedging for downside risk, right? That could be because of the data that's coming out today, right? Someone could have been putting on some hedged bets for data that's coming out today, and then took those bets off by the end of the day, etc. So, again, simply put it, yesterday we saw some degree of hedging, which means yield and caution. Yesterday, what was the price action of the market? Pretty much nothing. It just went down, up a little bit, shake down, up a little bit, flat down day. That's exactly the day we expressed was going to happen right at market open, to a degree. We basically said, the VVIX is up, that means someone is fearful, but the VIX hasn't broken out, so we're not truly expressing a feared market. So we're going to be in a yielding market because there's someone smarter than you and I hedging for volatility or tailwind risk, all right? For some reason, someone out there, multiple people out there, multiple players, or we'll just call it the magical wizard that controls the markets, basically said, be cautious. And so we were. And as a result, we got a day of pretty much nothing yesterday. What are the odds? Pretty good. So, that being said, we wake up today. What do we see today? We see that we have economic data coming out at 10 a.m. That surely is going to create some sort of algorithmic move in the market, right? Is it going to go up, going to go down? Don't know, don't care. I will be watching the volatility index and I'll be watching the hedging of volatility. If those start to signal to us that, yeah, we're going to go down, then sure, we'll look down. But that hasn't happened. So what do? We look up, all right? So what are we going to look for today? Well, number one, what do we look for? Let's go to the 30-minute chart on the. So we're just going to run through it, basic every day. This is what you do every single day to pretty much know how the market's to a degree set up. All right, so we go to the 30-minute. Is the S&P 500 positive on trend? Is it above the SMA? Yes. Okay, it's still a long bias swing market. So this is where we started long the market. We've been up. We've tested the SMA a few times, no breaks. We even tested yesterday, which I said we would, no break. And now we're up again. So we're still holding the trend positive. And now what? Now let's see if there's anything signaling to us on the volatility index that should suggest that we be bearish. Because though the market says it's positive, there could be other players and things in the market say volatility telling us to be cautious like it did yesterday. So like yesterday, the market's still positive. It's still a swing long market, but it didn't really go up yesterday. So if someone came to our channel that never watches our channel and goes, Connor, you said it was a swing long market yesterday, but it just went down. I would say, well, yeah. Were you looking at the VVIX or the volatility markets to know why we were going to have a lackluster day? Did you read something that told you to be cautious and yielding today? Or did you just say, here, swing long, go up? It's probably all you heard. No, it's not how it works. There's a lot more moving pieces to the puzzle if you really want to get a good feel for the markets. So we start with, is the market in an uptrend? Yes, it is. Is the market in an uptrend? Yes, it's in an uptrend. Okay, number 2. So this is all about, we've been in a buy signal. We're trying to determine if we should transition in more of a bigger picture. Not like, oh, there's a little pullback, let's short some futures and scalp the market. No, we're talking about, does it really make sense to change our bias and change our perspective on the market so much so that we would be expecting a bigger move, right? And when I say bigger move, it's still short-term stuff, but more of the swing environment, right? So number 1, market's positive. Okay, so Connor says if the market's positive, we really shouldn't be thinking swing bearish. So okay, we can't think swing bearish because the market's positive. But we also know if the VIX is telling us to maybe be bearish, then maybe we'll look to top the market. All right, so now let's go look at the VIX. And we'll look at the VVIX too, but that's kind of at the open. So now we go and look at the volatility index and we go to ourselves, all right, so it's possible for the stock market to be in a buy move, and at the same time, it's possible for the VIX to be in a buy move. So 2 things can be true at once, market positive and VIX positive. That creates an environment where you would be like, oh, well, maybe we will pull back because the VIX is trying to tell us that. All right, so we look at the VIX. So number 2, is the VIX positive? Well, it's below the trend. So no, the VIX is currently confirming the thesis that the market is in a buy signal. Market's positive, VIX is negative. That makes sense. Just like 2 plus 2 makes 4, that makes sense. 5 plus 5, 5 plus 5, yes. 5 plus 5 equals 10, yeah, that makes sense. Right? 6 plus 6 equaling 34, something is not adding up. I must do some investigating. Just like if the market is positive, at the same time the VIX is positive, that does not really, it can make sense, but that really isn't supposed to be the case. But since it's the market, right, things don't work perfect. So yes, it does make sense that you can have a positive market and a positive VIX. But then one of them has to eventually be lying and get corrected, which will eventually happen because the market always corrects itself. All right. So we go and we look at this morning what's going on. We have a VIX market that is is negative, right? Why? Because it's below this price point we've just said, right? This yellow line. If we get above that, that's where we could start to see more fear being expressed in the market, which would cause someone like me to be more bearish the market, which would cause other people which would cause those that are not retail, your average retail trader, to be bearish the market. All right, so we have not triggered that yet. So we are just a long bias stock market, all right? So however you want to use that for your advantage or whatnot, feel free. But the information is not wrong. So now that we've pretty much covered the entire market today, that's it. Literally, there's not a whole lot. Like, that's all it took this morning. That's it. I mean, it did take quite a bit, like 20 minutes of explanation. But for me, all it took was literally flipping through like 3.5 charts and be like, all right, well, we're still in a long bias market, right? Did not map off any horizontal support. Well, it's not entirely true. I guess I kind of did, but didn't really go to the SPY or SPX or QQQ and look left and go, is there a cup and handle? Are we hitting a trend line? Is there a bull flag? I didn't really look at any volume. I did not look left and create like a horizontal support and resistance on the S&P 500 to really determine that. Literally just a couple SMAs, couple different markets, understanding the confluence between the two or three, and that's it. That's all it took. Now that has nothing to do with exact entry point or the perfect timing of a sale or an entry or whatnot. That's all the general consensus of the market to understand kind of the little bit of a bigger trend going on, right? If you want to short markets and get good pullbacks and breakdowns, then this is what you have to follow. If you want to, basically get involved in the stock market and be swing long or whatever, to a degree and be right for days and days and days and days and days, this is what you have to follow, right? If you want to avoid listening to the news and getting scared because the news says something, this is what you follow, right? Anyways, market's open. Again, there's really not a whole lot to say. Now what we do, now that it's market open, what do you do? Well, you still watch the VIX, you watch VVIX. I don't even know if the VVIX is open. Doesn't look like it unless it's a really small candle. No, not open yet. Yeah, what was I going to say? Yeah, so we're just watching up, guys. It's that's all. It's just a long bias market. But yeah, now that the market is actually opened, we are going to now do what? Now we look at the market internals, the things in real time driving equities higher, right? Well, kind of. Well, driving markets higher, right? So how are the equities performing this morning? So far from the open, our Magnificent 7 combination ticker is positive. That pretty much means the market's not going to go down, literally. I swear to you, like 95% of the time, which would be like 95% of the days that you're watching the market, if your combination ticker of major market cap stocks is positive, market's not going to go down. It just doesn't happen. Well, it does, but like it's rare. You know what I mean? So that's why I could just comfortably tell you guys, hey, there's 2 green candles on the market's not going to go down. Like in this exact moment. So this market internal stuff is for like the immediates, right? So again, if your major market cap stocks are all going up, what are the odds that you can short the S&P 500 on this 1-minute candle and expect to be profitable or go positive on your position? It's just it's hard. You're betting against the market at that point, like realistically, right? So let's go look at the SPY issues. So look at this. If you look at the SPY right now on your own, you don't have to look at my screen. Just look at your own screen. Type in SPY. You're going to see it's going up, right? But if you look at the advancing declining issues of the S&P 500 collectively, they're not. So explain that to me. Can you explain to me how is the SPY currently going upwards while collectively the issues of the S&P 500 are not? Wouldn't that make the whole argument of advancing declining issues like false? Like if you watch if more equities in the market are declining, then it should be going down. Or if more equities in the market are inclining or going up, advancing, then the market should be going up. Like that would make sense. But somehow today, the issues on the New York Stock Exchange down, issues on the S&P down, but yet the S&P's up. What? Can anybody make... Yeah, it's obvious because literally we control the market 95% of the time with like 7 stocks, right? So if you watch a combination of those few, you'll have a really good idea of, well, I see why the SPY's up. Even though the issues on the SPY are down, I see why it's up, because we got 7 stocks that are worth like $7 trillion, and we're just buying those right now. And that's creating an environment today in the market where we're still driving the price higher. All right. So that being said, it's just a long bias market, and in the exact moment, we can see that the market is moving up off the back of a handful of stocks this morning, which then tells us one of two things. If those don't continue to perform, the long will get pinched. It'll stop, right? Because there's nothing else helping it, right? If the S&P issues are going down and the only thing helping the market up is like 5 stocks, well, if those stop going up, then what's going to happen to the long move? It probably slows down, it could top out, etc., right? So that's what I'm getting at. When it comes to short-term trading, you can watch a handful of these markets, right? And you can say to yourself, all right, so the market's going up. There's only 5 stocks that are basically moving today's market up. Okay. So as a trader, what can I think to myself? I can think, all right, it's going up. I know it's going up because there's only a few of them driving the price up. All right, I want to be bearish. For some reason, I want to be bearish, even though it's whatever, right? Let's just say someone wants to be bearish. All right, so when should I be bearish? Well, the VIX didn't tell me to be bearish, so we're not in a swing bearish market. The stock market isn't in a swing bearish market, so I don't have the bigger trend helping me right now. So I gotta dial into some shorter term stuff. We know that in the short term, the markets go up, as long as equities are going up. And on this day, I see that really the only thing truly going up is like the Magnificent Seven. So okay, if those stop going up, then the market could top in real time and in a short-term trade. So that's what I might look for to get some confidence to be bearish is, do we stop moving up the Magnificent Seven, etc., right? That's one way you can look at it. The other way would be, if you wanted to continue being long bias. All right, so I want to stay long, but I'm a little nervous because the S&P issues aren't going up. The issues on the New York Stock Exchange, they're not going up. The only thing going up are the Magnificent Seven, which that's okay, but I don't have the entire gang helping me, right? Like everyone's not truly helping on the long, which makes me slightly uncomfortable, right? Because if I'm long the market, I would rather see everything performing in the same direction together, because that would be a strong, broad market move, right? Not only do you have Apple and Microsoft going up, you got Honeywell or, a bunch of healthcare stocks moving. A broad market participation move requires just that. Every person playing along and singing the tune of the bullish market. And today, we don't yet have that. It could change. It could come. It may not come. Again, you don't really know if all of a sudden all of the other issues in the market are just going to go screaming long, right? You can't know those things, right? I mean, you can have an idea, but you don't know for sure. But the one thing you do know for sure is if they were all moving together, then the market would be moving significantly more bullish today. But we only have a handful of stocks participating for the moment, and it's really just a combination of Apple, Microsoft, Amazon, Meta, Google, Nvidia. I think Tesla is the one I watch, right? So that's that, right? But at the end of the day, sometimes that's all you need. And 95% of the time, that is all you need to move the market up and or to hold it up and not allow for some sort of shakedown in the market. Another thing too, if you want to watch, is just this actually works relatively good, MACD for this combination ticker on a 1 minute. If you go to a 5 minute, it's going to be way too slow, and even the 1 minute can be somewhat lagging. I mean, it's always lagging, but it can't help. So like, look at this, right? Someone's like, I want to be bearish in market. It's like, bro, there's 0 1 minute negative momentum on your major market cap stocks, right? So think about, I don't really know what the valuation is, but we'll just say that all of these stocks have a valuation of $6 trillion. I don't know, maybe that's what it is, 4 trillion or whatever. So right now there's 0 negative momentum on a 1 minute chart for $7 trillion, if you will. 7 trillion's all positive collectively right now. Good luck topping the market for a moment, right? You're going to need that to start printing red, or you're going to need that MACD to flip red. If it doesn't, I mean, you're just going to get pushed out, or you're just not going to have that kind of swing to the downside that you're really looking for, right? So that's enough of that. But again, that's pretty much the repeat every single day. Now, we also had a gap up, and I can just see based off the way the market's moving, we did the Fibonacci gap and go 161 target already. So if you look here, today's gap, right? So you have a gap up. We're going to measure from the previous or from the open to previous day's close. First target's always going to be the 161. Algorithms pretty much just like to do that. So we just, you can see right there, 161. So that's a common tactic on a gap up day or a gap down day. We'll always look for the market to express that impulsive move to 161. Doesn't always happen. I would say it works. I mean, it used to work 70% of the time, and then it seems like I taught it. Then all of a sudden it works 50% of the time. But you know, the bottom line is, right, my expectation is in line, right? Which is that, yeah, we think the market's a little bullish today, whatever. We got a gap up. If we express that bullishness in the gap up, we should go to here. So now we've correctly kind of have an idea of how the market can price itself upwards on a day like today, where we've determined we're not bearish. We are, in fact, bullish. We've been running the market up with just a handful of stocks. We have a gap up. The expression would be higher, gap and go, 161, etc. So that's effectively how we've priced ourselves to here today, and we've done it pretty much off the back of the Magnificent Seven. So look at what's happening. You see how the NYSE is got it. Look at. So NYSE put in a green candle. Now you have some movement up on the SPY, but look at the SPY. It's starting to top just a little bit. It's actually wicking, right? That's because we printed a red candle here. So look at you. Literally, the S&P issues are going up now. NYSE issues are going up, but somehow the market isn't advancing. How does that make sense? Because just a second ago, we were moving the entire market positive with these stocks here. Now they're going red, right? So we're slowing down this top on the SPY. So if we go bring up the SPY, look at that. Look at the wick now, right? Look at flat down. Look at your Magnificent Seven, pull back down. But look at the S&P. Oh, how is that? Because we can. Major market caps. Not to mention what happened as soon as we got up to the 161. So the overnight gap has successfully expressed its energy to the 161. So the first initial gap and go long target is complete on the day. So what are the odds that the algorithmic systems move the market to 161 today off the gap, and as soon as we hit there, we then go red on these Magnificent Seven tickers? That's crazy. No, it's perfectly set up. That's what that is. So that's fun. Anyways, good day to you guys. I can see you guys are super busy in the chat. Really appreciate that. I hope you guys are having a great day. I hope you guys enjoy me spending my mornings here with you. I can't really tell. You're a hard group to get any information out of. I'm not sure if you guys are deaf or if you just don't have hands, because none of you guys type. So I'm going to assume that you're either deaf or you guys were all carpenters in your previous jobs and you've actually cut all your fingers off and all your hands off, which that must make trading very tough. So kudos to you. I don't even know how you do it. Oh, what a lovely day. Just predicting the largest globally traded as market. So yeah, like I said, we've already hit our long target. Doink. And now you're seeing some red on. Look at that. So you got some red, and look at now the MACD is red. Again, if it's a false cross, then the market bottoms and gets picked up. If it's not a false cross and this does actually shift momentum a little bearish, then you're going to basically see the market top out a little more and come down and blah, blah, blah. It's just dependent on basically this being a false cross. If this is a false cross, it's going to, again, we just reboost the market back up into a long and so on and so forth. And yeah. I hope it's handling. Cube is hanging. Hilarious. What's going on with Bitcoin? Oh, Bitcoin's down at 90K. Oh no, it's almost to our sell target. Actually, it might be at our sell target. Not quite. So, you know, if you guys, well, you guys know it's usually the same people every day, I feel like. But yeah, so you guys will know just about a couple days ago we said Bitcoin's going to pull back to about this box. So we've completed about 90% of that pullback target. Well, maybe not. I mean, depends on how you read it, right? If you're reading to here, we've done 90% of it. If you're reading to here, maybe 60. But either way, that's why the little smiley face is there, because that's where we're trying to take the market on Bitcoin for the moment. So, yay. Okay. Yeah, again, there's all a bunch of different penny little stonkers moving around. Um, I do have a small position on AGAE. Bought that like a couple minutes ago. Not a recommendation by any means, but if you want to follow along with that one, feel free. Same story as always. Stock went into an uptrend. I thought it was decently low risk down there, so bought a little bounce there. Probably won't do a whole lot. Who knows? We'll see. Um, the stock TORO I think is a little overcrowded. That's why I'm not going in on that one since the open. There is another one here that looks decent. I'll take a stab on that. Yeah, I mean, it's very low volume though, but yeah, as a CLIK, I'm going to buy a little bit of that, but it's, oh wait, I can't. They don't allow me to trade that one. Never mind. CLIK I'm not buying because it won't allow me to trade electronically in my Roth IRA for that one, but no big deal. I was say yeah with with what did I just say with Toro? Yeah, Toro I traded pre-market for a trade. So I already did do some trading on that, but like I said, pretty much after my initial involvement, I don't know. I feel like it's a little overcrowded, so I'm just not involving myself on that today. After this morning session. And now I'm gonna take a second. Good morning, Joe. I'm gonna take a second to flip through just a bunch of other stocks and see if anything's triggering a buy. I can't trust that one. Again, guys, we're still just long bias the stock market. That's pretty much it. Just long bias the market, baby. Until the system tells us otherwise, or maybe until I say otherwise, I guess. TDIC, what about you? I mean, it is positive, but it looks a little sketchy. So let's start on low side, BMEA. What's up with this guy? Oh, AGAE just doing the old scammeroo. Basically not going to my limit orders. They just love to shy my orders all the time. But that's okay. I mean, what do you expect? The market is, that's what the market always do. It always try to do its old little scammeroos. Yeah, so we're just going to keep watching the market up. Not a whole lot more to say there, guys. It's pretty straightforward. We're going to watch the market up until we're signaled to change based off the volatility index. Volatility is not up today. So basically, well, it's up as far as like price action goes, but it's not positive. So again, we're not bearish the stock market right now. There's no need to be bearish. Don't be bearish. There's no point. I mean, you could be bearish if you're looking for short-term trading. I'm just talking about like the swing long environment. We're not going to be bearish. Will day trade short? Well, it makes most sense to try to really short when the market actually changes trend, right? Obviously, you can short tops on a market. That's fine. Or like yesterday, when we saw that the VVIX was increased, like that would be a day to try more bearish bets because obviously there's some signal to be bearish. So you can see yesterday we kind of had those two big yanks on the market. That made sense, but today there's nothing. Unless the market just randomly tops out and a bunch of issues on the day to start selling off, then there's just no point of looking bearish. So like, Jerry, yesterday was a decent day if you wanted to scalp it down, if you will, right? I just can't see it. There's just nothing. There's nothing. Again, the volatility index has not triggered a breakout. There's nobody hedging downside risk in the market right now today. So that's another thing. Leading in today's economic data at 10 a.m., there's nobody hedging volatility. So that already signals to me that unless something random happens, nobody's fearful of today's data. So if smarter players aren't hedging downside risk for the data, then arguably the anticipation is that the data isn't going to hurt the market, the data isn't bad, or the data's good, right? So I don't see enough hedging in the market right now to suggest that today's data is going to be bad. So I'm going to assume that the market A is going to go up and that B, the data's, regardless of how the data comes out, I don't care if it's good, the numbers say it's bad, or I'm just going to assume the market goes up regardless of the data, whether it be bad or good, because there's no hedging right now in the market. Now, that doesn't guarantee that I'm right, but, these are the signals and things that I pay attention to, and nothing tells me that, data's going to be bad right now. Or, well, there's no tailwind risk that I can see in the markets based off of increased assumption of fear, if you will. So what you gonna do? You're just gonna stay long the market. So this is now Let's see how many days this has been. Let's see. Let's delete this a little bit and go back to our 30-minute. All right, so how many days has it now been from there to here? So it's now been 13 days, 17 hours, and 30 minutes that we've kept you on the long side of the stock market. Not bad, right? Think about that. There hasn't been one point throughout these 13 days, well, almost 14 days now, that we have suggested you should be bearish the stock market, like looking for a bearish move down, right? Pullbacks, intraday momentum, that's a little different. But as far as the swing market is concerned, we said stay long now for 13 days and 7 hours and 30 minutes, essentially. All right. And the market has now increased 3.89% or 4%. If you were to use your leverage ETF on this swing move, which is what we always discuss, we never suggest, we just discuss. If you were to take the UPRO move from the best possible algorithmic shift point to where we're currently at, you could be up 11%. I myself am not up 11% on the swing move. I can tell you that, because I think I'm smarter than the market at times, in which I'm clearly not. And what do? I buy in, then I take a little off, let some ride, take a little off, then buy into one of these dips, take some off. You know, I'm kind of trading up the move, where at times it would just be buy it, hold it, and only transition when you're signaled, right? So part of me, I feel like maybe needs to use a secondary account solely for that rule, because there's times where my gain would be significantly better. You know, even though I do a good job at understanding and predicting how and when the markets can change, that psychological aspect of wanting to take money off the trade and put it in your pocket can hurt at times, if you will. And so, kind of sucks. Who is Warren Buffett? Lacks to buy stuff and just never let it go. I mean, I think you know who Warren Buffett is, but yes, Warren. I mean, heck, Warren hasn't. I mean, I think he just recently bought some stuff, but he's been holding a lot of cash for a long time. He's been basically more cash heavy than anything. So he's kind of been sideline ready to deploy, if you will. But yeah, I mean, I don't know if you're saying buy and hold yourself, but yeah, that's a great approach. I do the same thing in many other accounts, if you will. Just buy, hold, gold, silver, Bitcoin, etc. You know, so, but for the purpose of our YouTube stream here, it's more about speech to text is bad, no worries. But yeah, so, you know, at this point, it's really just this YouTube stream is about helping everyone understand kind of the relatively short-term understanding of the market, so that way you're not confused and you basically get swindled less, you know, and, you know, that's pretty much that. You just can't, 'cause it's too late. What is this GURE thing? It's got the pop this morning was from 6 all the way up to 20 something. Wonder if that's gonna turn into something cool. I hate continuation plays, but what's the risk? The risk is downside risk right now for this stock is 61%. Damn. Yeah, I mean, a downside risk of 60%, I might, you know, it's like that's what I'm saying. It's like, do you want to buy that? I mean, I kind of do, but I would have to put on such limited risk that it's basically nothing, so that if it goes down 61%, it doesn't matter. So, sure, let's do it. All right, I've put a small position on GURE just because I don't know. I just look at the volatility and maybe if I get lucky or if the market wants to pump this thing up, then it's got a huge amount of range. But if we're wrong and it just basically becomes a piece of shit, then there's 61% downside risk, which is going to take the market back to basically like $4. So I basically put on a small position that I can let this thing go all the way down to $4. It's not going to hurt my feelings. And then if there's a bounce at $4, I could average it down or I just take it off. So do I think it's going to go down 61%? Not necessarily. But if the algorithms that control the market want to, I mean, that's where it can go. So anyways, I put a tiny one on there, just basically playing around, kind of having some fun with a stock that has extreme, maybe volatility. I don't know. I have no clue if it's going to be good. Don't really care if it is or isn't. I mean, I do because I want to win, but I don't have enough on that it's going to really hurt me if it doesn't go well. So probably won't work because that's usually how the game goes. What else we got going on here? YGMZ, what are you? Like, the market has been so lame these past couple days, weeks, in the sense that it's like, they're just not triggering any buying operations in real time during the live trading hours. They're just early morning buy moves, pre-market, 1-2 candles, not enough time to involve yourself the way you'd like. It's just been an environment where the people that control the systems are not making it easy, which is usually the case. But every once in a while you get some setups that are like, oh, that one's obvious. But I haven't seen many of those these past. I mean, there's a few, but I'm just too late to them, if you will. Interesting. I mean, I wouldn't say it's, I mean, yeah, obviously, but it's always the same system. That's what I mean is for penny stocks, for the stock market, it's all the same system. But yeah, I mean, like I said, I mean, basically, to put it simply, anytime there's a good setup, like this morning, for example, let's take GURE, right? We'll just look at this one. There's plenty of examples you could go through, but for example, like GURE had a breakout today at GURE had a breakout at 415. The first couple candles of the breakout is like nothing, and then you have 1, 2, and then 2 huge explosive candles, takes it from 6 to 12. So unless you bought somewhere in those 2 candles, I mean, you know what I mean? It's just, they never really make it easy. So, you know, you find yourself just not having a lot of good setups. You know, that's why arguably penny stocks are risky in that sense, because the good buy points, they only last for like 10 seconds, 30 seconds, 40 seconds. The ideal A++, triple, you know, A+, Better Business Bureau rating setups only last for like seconds. Or minutes for that matter. And then the rest of it's continuation, which continuation's all controlled by market makers and those that pretty much want to manipulate stocks higher. I mean, you know, at the end of the day, it's like once you buy a stock, that's it. Your capital's in. That's it. You're not really a part of the crowd moving it up, right? That's either the next buyer or the algorithms that basically run bidding wars on stocks and or pressure the ask to bring them down, so on and so forth. So it's just like whatever stock you pick, you just have to hope that the stock market's going to send a buy algorithm on it. That's all you can do, right? All you can do is just try to limit your risk and then hope you find a buy algorithm at the end of the day, you know, as far as continuation goes. But yeah, the AIs. Dude, oh my gosh, the stock market's going up. Gosh darn it, what is going on? I don't understand. Right, so for example, too, if you guys are looking at my chart, you're going to see that today, the chart, look at, ready? So someone somewhere is going to do this. They're going to have a YouTube stream just like mine, I guess, because I'm doing it, right? Look at, guys, look at this bull flag, right? So the book is the pictures and the books, and they're going to say, wait for this long bull flag, and then once you find it and it breaks over, you buy it, and there's your trade, right? That's what they'll tell you to look for. They will not tell you to look for the cross of the algorithm shift all the way down there. Right? That's where you want to be long. Then arguably in the dip, right? In some of the dips. You're not wanting to look, you don't want to look for a bull flag like that and then have that be your main approach, right? Be long because there's a bull flag. No. Anyone buying this market up long today, in theory, is just helping anyone and all the computers that have been buying this, which is fine, right? You can still, like, you can make money, but I'm just saying, like, you don't look for patterns, right? It just so happens, right? This is the thing. It just so happens that the market went into a buy signal. It then went up. And then this whole consolidation, this whole flag was really the VIX back testing, right? It was really the VVIX breaking out. That's what created the temporary yielding on the market, because we weren't sure if the signals on the VIX and the VVIX were trying to tell us that we're going to break the market down, or if it's false and we're going to continue up. So the bull flag had nothing. I mean, the bull flag, whatever you see there, that, I mean, yeah, call it a pattern and whatever, a continuation. Yeah, exactly, whatever. Bull flags are continuation patterns. Ready? Market up, bull flag, break, continue, right? True. But why did we continue? Because the signals on the VVIX, well, let's just type this out. The reason we continued is because the VIX and VVIX signals the past week were not strong enough, arguably, to cause the market to shift / break down the 50 SMA specifically, right? So what do we know? We know that when the VIX and the VVIX are starting to give signals that could suggest the market is going to go into more of a pullback corrective move, then what do? We pause on being long. So what happens? Market goes into a buy signal, then the VIX and the VVIX tell us to chill. So what happens? We stop buying the market. As a result, it doesn't go up. As a result, it goes sideways. As a result, we create your bull flag pattern. And then once the signals on the VVIX and or the VIX go away and we go, okay, there's nothing to be fearful about, your market continues. There's your bull flag breakout. Again, you know what I mean? Like, do you see the full picture? You know what I mean? So, yes, we just had a bull flag breakout today. Why did we have a bull flag breakout? Because all of the signals on the volatility index for the past week did not come to fruition. We did not signal to the market to be bearish. We signaled caution, yield, wait, and as a result, nothing came. So, we continue. Buy signal lasts. That's 13 to 14 days where we've kept you on the right side of the swing long market. Job well done. You've stayed on the right side of the largest globally traded stock market ETF in the world for 14 days straight. Must feel good. Must feel good. Granted, I should be like a quadrillionaire by now, but somehow I'm still not, because God has given me this beautiful brain of emotion, and I just love that so much. So that I haven't made $1 quadrillion trading. But maybe one day, but probably not. But you never know. We'll see. We'll see. Yeah, so Jerry, yeah, I would never draw a channel like that and look for like scalping opportunities on that. That's just not something I do, nor would I really suggest to anyone. The tactics for identifying these lows in here are far more complex than it is to just draw a line across your chart or do that, or angle it where it's been. I mean, you could say it works, but those trend lines are no match for the real signals and algorithms and volatility levels and what have you, and volume weighted average prices and so on and so forth. Yeah. So, yeah, this is not, it's not something we look for really. What I mean by that is we again, we would never draw a price across the chart and go, yeah, we're gonna scalp it when it runs in it. No. That is the basic starting point of all retail investment, and that's exactly why I no longer do that. I started there and realized that's exactly the wrong thing to learn. So that's why I don't preach it. I don't teach it. I will never tell anyone to do that, because it doesn't work, and it is in fact a very, what I feel, incorrect way of providing market information and insight. Because that same concept would say that we're supposed to short the market here, and then it breaks out, right? That same concept would say that I'm supposed to short the market here, and then it goes above it, right? The same concept would say short it here, and then it goes above it, right? So if you look left on your chart and go, I'm shorting because it said there's a top, right? Then you're just going to get blown out all the time, right? Because the market doesn't care about, necessarily those tops the way that retail is taught. What it cares about is direction of trend. Like when we're above, we go up. When we're below, we go down. When we're above, we go up. And when we go above, we're going to knock out your levels, right? Because the algorithms are on the long side. We're not looking horizontally at previous price action. We're either looking at algorithm levels, we're looking at Fibonacci, we're looking at no golden pocket confirmations, we're looking at volatility confirmation, a whole list of things to really understand why markets move the way they move, most of which has nothing to do with drawing a horizontal line on a chart. Sometimes, but very rarely. Granted, if it works for you, then you just keep doing it. You know what I mean? But those sort of things never really work. They work, but they don't work good enough, in my opinion. Man, look at this market going up. Who would have thought? Oh, actually, it's past 10 o'clock, so the data came out. Let's see, what did the data say? Price index month over month. Who cares? Market's going up. How did we assume that was going to happen? Because there was nothing signaling us to be bearish, literally. Now, could the data have come out bad and gone down? Sure, it could have, and I could have been wrong on my estimate. That's obviously, like, that happens. But like today, what do we say? Hey guys, stock market's long, the VIX hasn't broken out, there's no one hedging volatility, so if there's no one hedging volatility, they're probably not really scared of the economic data that's coming, and if they're not scared, then that probably either means it's going to come out good, and even if the numbers looked bad, it would probably still go up, etc. So, think about that. Didn't read any news article. I did not go to a YouTube channel. I did not go to any sort of news organization to listen to the talking heads on the television to tell me why the data should be good or why the data should be bad, and if it was, and that, and this, and that. Nope. We just simply looked at three metrics: the stock market, the volatility index, and VVIX. And through those, we were able to determine that the likelihood the market would go up today was good, and that the likelihood that the data would come out positive or the reaction of the market would be positive was correct. And all it took was looking at three charts. That was it. But also, like, years of looking at it. So there's a little more to it than that. But seriously, three charts, couple years of looking at it repeat over and over and over and realizing it's the same thing over and over and over. There you go. So what we just did today, and what we just reviewed, it's an ongoing, ever-repeating process until the day me and you guys probably die. Literally. Same system, been using for years, never fails. It's the same repeat. Now, there's moments of trickery, don't get me wrong, but the system always repeats. It never stops doing exactly what it's meant to do. And once you combo it with a couple different markets, you realize it's the same exact strategy across all tickers. to a degree. You can start lining up the same system with multiple different tickers or indicators, if you will, and they all have the same trigger point. They all have the same rationale. And then you can start reading it as a picture book because you realize it's just the story. It becomes a storybook, right? And the storybook is always the same. Once upon a time, the SPY broke over the 50 SMA, at which point the market knew to buy long. And the market would stay long for as long as it took for it to be signaled to be bearish. The big old nasty bear comes to knock on the door when the SPY falls below its 50 SMA on the 30-minute open high low close chart, or when the VVIX or the VIX signals that maybe we should top the market, none of which has happened currently. So what do? We stay long. And that story repeats over and over and over, to the point where you can tell it to your children without looking at the book because you've seen it too many times. Which is funny because I'm still not super duper rich from trading, which I don't quite understand, but I guess that's the human psychology of the market, right? So here I am, just in my sweatpants, chilling, watching the market. Somehow predict it very well, but somehow still struggle to make a bunch of money off of it. Tell me why? Don't know why. But that's it. Granted, maybe one day I'll grow the balls and start swinging around, thousands of dollars like I used to and actually hit some big bangers. But for the time being, I just kind of keep it chill, keep it copacetic, don't risk a whole lot of money anymore, and just, collect my monies as best I can and teach you guys on YouTube, which nowadays is more or less kind of turning into maybe a preaching of be careful trading because I had great moments and lost a bunch of money and now I'm here rebuilding myself and blah blah blah. So again, most of what's on YouTube, trash, in the sense that you'll probably end up losing money, so be careful. All right, be careful listening to the news, probably not going to help you. You don't need to listen to the news for the stock market. You can look at 3 charts and predict the news. You know what I mean? So, yeah, hope you guys enjoy the day. I hope you guys are learning. I hope you have a blessed day. I hope your family's healthy. I hope you're healthy. I hope that your hands grow back so you can learn how to use the keyboard and type into the chat. That one, I don't really know how that one's going to work, but I will pray to the heavens above that the Lord will replace your fingers so you can start typing. So yeah, guys, every day we'll just hang out. We're just going to do the same thing over and over and over. And if you guys make money from the system, that's all anyone could hope for. On my end, on your end, that's pretty much it. The main goal of our channel at this point is to not hype you up, not hype up the markets, just give it to you plain and simple, couple simple things you can follow to the point where you can start reading the market like a storybook. You can start predicting the news before it happens. You can do kind of like we did today, have an idea if the economic data is going to be positive or if it's going to move the markets positive or negative, things like that, right? That's really the whole entire goal of our stream, right? And then if you want to advance things and go crazy and try to get into futures and stuff, then you can talk to my business partner, Brandon, right? He's crazy. He is the most consistent trader I've ever seen in my entire life. Granted, I can't say I go seeking out a bunch of traders these days, but I've witnessed with my own eyes him crush it for too many years. So then if you want to try to excel that, sure, you can go and kind of dabble in the futures market. But if you want to just kind of keep things chill, keep it copacetic, be in a couple swing long positions on the market, nothing super duper risky, but still a little bit of trading action, then you may just find yourself here on this YouTube stream every day, right? Other than that, dollar cost average, literally buy the SPY, buy VTI, buy VOO, throw a standard deviation statistics probability channel on top of that. Smart dollar cost average. Buy on Mondays, beginning of the week, right? Beginning of the week is the historically better time to dollar cost average to get better returns. Increase dollar cost average when markets are trading on sale. When are they on sale? Generally speaking, when they're trading below their long-term historical mean average across a 1 year probability or a 2. Do things like that, right? Always do that. And then keep your little trading account if you want. Swing along the market, buy a couple little random penny stocks here and there. Have some fun with it. Again, like I said, I went from, I've traded for a lot of years. I've had a lot of great wins, a ton of good losses, screwed up psychology. Again, this is not a game for the weak-minded, if you will. But it is a brutal game, and it can be. And I've experienced the wrath of the market, and I've experienced the greatness of the markets. And after all said and done, sitting here after 10, 11 years, this is where I've settled most likely, which is probably don't try to day trade first, right? Learn the game, learn the system, and if then and only then you want to try to lose your money, feel free. It's very, very hard to become consistent trading long term for an extended period of time. That's why I tell people, my business partner Brandon, it's exceptional how well he has traded over so many years, right? Exactly. So, there was even a time where I was in a short position a long time ago on a penny stock, and I had a lot of money on it. And I don't know, I don't remember what I lost. It might have been 10 grand, 15 grand on the trade in our chat room. And I was like, you know what, guys, I'm in a short position. I already know I'm going to lose on this one. I'm about to cover. So just start buying into the stock right now, and then I'll cover here in just a little bit. I'll explode the stock up, and you guys can win a bunch of money off my loss. Sure enough, what happens? A couple minutes later, hey guys, here we go. I cover the short, stock breakout, blows up a couple dollars a share, and they all make money, right? So I did that one time. That was kind of fun, though. At least someone got some action out of my loss there on that one. So anyways, yeah, that's where it's at. We're just chilling, having fun. But yeah, like that's really what it is. I guess nowadays I'm really just here to kind of preach the good stuff and the dangers of the market, while also trying to give enough insight to kind of hopefully lead you in the right direction and kind of make you steer clear of some of the dangers. And it's funny. I never really expected my brain would change that way, but it has over the years. Again, I thought trading was the greatest thing on planet Earth. That's probably because when I, closed out a year making 200, was it 250? Maybe it was 200 grand. I always get that. Yeah, I was like 200 G's in 1 year trading. I'm like, oh, solved it. I'm good. Never going to lose again. Yeah, well, I got my ass kicked. So like I said, I've rode the highs and I've rode the lows of the market. And now I'm kind of finally settling into my just calm, relaxed environment. It's probably as I've gotten older and got a little bit more mature with my emotion, maybe. But yeah, so again, it's hard to really tell people to trade, because there's so much to it. There's so much learning that if I had to look back now, absolutely not. I don't think it's something that you should push on to someone, actually. I think it's the last thing you should ever push on to someone is trading. And then again, I started investing and I all of that stuff. And then, you watch a couple of YouTube videos like, I could do this. And sure enough, you can, but it is going to be a long, challenging battle, right? So that's when you got to pick for yourself. Now, obviously, once a trader's in the environment, yeah, we'll take them by the ropes and try to show them everything they can possibly know to try to become profitable on their own. But again, 90% of people are going to lose. And I basically have fallen into that 90%. I started in the top 10, if you will, and slowly trickled to the 90, who ended up losing money after enough years, if you will, right? Made some gains, took the gains and diversified into some real estate. I was like, you know what? I made some money here. It's also kind of risky. Took some money, bought some real estate. Shortly after that, AMC GameStop shit. Lost like 200 G's and some terrible shorts. That sucked. So what you gonna do? Sit here and be like, yeah, dude, go trade. I mean, I still trade. But, like I said, it's a long battling path, right? And so unless you're protected elsewhere, again, it's a hard thing to do. So at least I had 2 cents to know to do that. Take some money, invest in some real estate, and grow that way too. Because now that's, in a sense, I don't want to say it's consistent, right? But you just have assets there appreciating behind the scenes. Well, as long as the government prints a bunch of money, they're going to appreciate. So, yeah, that's that. Yay, market's gone up. We're all making money today. Cheers. My 401ks are loving it. The stock market's loving it. Now, I guarantee, and if I'm wrong about this, I will give one lucky follower $1. I will Venmo you $1 if I'm wrong, but that's it. I guarantee that if we go look at the news today, it's going to be bullish, and I guarantee they're probably going to say something like, the core PCE numbers, Michigan consumer sentiment is good, or it was bad, but market shakes it off. And yeah, probably something like that. Let's see. Stock market news today. Let's bring it up. What do we got? S&P 500 gains, fourth day nears record after light inflation reading. So inflation's coming back light. Market boometh. Stock market, Dow rises, Fed favored PCE inflation data. Wow, who would have thought? Crazy, right? Stock market today, rise ahead of key inflation data. The AI stock toilet plunger, Magooster, who gives a crap? You don't even got to read it. You already know. Why? Because the news is obvious. News is obvious. What are they going to talk about? What can they possibly talk about? Whatever economic data is coming up. Whatever earnings are coming up. Those are, 8 times out of 10, whatever the economic data is, whatever new earnings is coming out, that's what the market will use as its poster or selling tactic to the public. It's easy. It's obvious, right? You just have to understand the trend of the market, which the trend of the market is up. There is nothing that signals us to be bearish. So we're most likely going up. And as a result, we'll probably go up during data. And what's going to happen? You're going to have some little, college graduate student with her writing degree coming out and working for CNBC going, oh, the data was good. Maybe that's why the market's up. No, stop it, Susan. Chill out, all right? Stop that. It's not why. It's because the market is controlled and there's algorithms and we're running this up. That's why. So, damn, it's only 10:25. Like, what else do we have to do on this day but predict the largest globally traded stock market again? You know what I mean? All right, let's go take a look at Bitcoin. Oh, Bitcoin. Nice little candle there. See, like, for example, today Google went, the past couple hours, Google or whatever day, Google went into a buy signal. So, we're getting the buying pressure of the buy signal on Google. That's coming into the market today. NVIDIA today this one went into a long move and then did the back test. So if you look at NVIDIA, so NVIDIA went into a long move there. Back test support bound. So NVIDIA is helping the market go up in that sense. What about Microsoft? Microsoft is actually negative. Microsoft is negative, trying to do a recovery right now or a back test and down. One of the two. Google, we already did that one. Apple is negative, but it's been bouncing today. So it's either going for a back test or, whatever. It's in a bearish move. What else we got? Tesla. Ooh, Tesla is the one helping the market. So Tesla went into a buy signal back here. So Tesla entered its buy signal back there. Backtest support, continue. Amazon went negative past couple days, bouncing for a backtest most likely. Netflix is helping the market quite a bit today. So Netflix was negative, down, now oversold, bouncing, arguably going for a backtest. Meta has been in a buy signal since here, up. Had a false breakdown, then back to a long here, and now up. So that one's been helping. So yeah, interesting, to say the least. Come on, GURE, do something cool. Still long GURE, but again, it hasn't really done anything. What am I up? Probably like 1%. I am up 1%. Sick. But not like I really expected a whole lot. Let's see. Hopefully I do makes you lots of money, Jerry. Hopefully I do makes you lots of monies. ATMC. ATM Dom. COO. No thank you. VSCO. No thank you. DH. No thank you. SNSE. Nope. HCAT. Nah, I don't really like that. IRBT. That's continuation, so no, but also late, which, anyways, there's that. Toro is the one that's overcrowded. I said we're not going to involve ourselves on. Pretty much just up, then flat, sideways, nothing going on. AKAN. I mean, it's positive, but it's kind of looks like it's a big float stock, so it's just not really doing a whole lot. Any hooser? What's the next one on the old Lister Magoo? INHD. That may have just hit support. Or nope, never mind. Or wait, it kind of did. Interesting. Well, I already had a breakout and a back test there, so I don't know. We'll see. Yeah, I'm like INHD kind of hit support, but that was all the way down at 14 cents. It's already up to 15, so what's that going to be? It's already up 3%. But I guess if that thing ends up holding support, could do something cool, but probably not. So continue on. Okay. What are we looking for now? PRAX. No, no thanks. JFBR. That is now down to support and below, so probably not too much of a shakedown. Probably not gonna work. TDIC. That's in an uptrend, but also elevated from support. Could it work? Yeah, but probably you want a back test. So no to that one. PAVS. That just looks terrible, so no. WHLR. That one is elevated from support, so either it's going to continue or it needs a back test. So no. GURE. Basically still doing nothing. But maybe something. I don't know. I'm really just hoping that somehow turns into like a multi-day runner and does some crazy stuff, but it probably won't. But that's why I have a little bit on, but not a ton. SMX. Wow. Hold up. That's crazy. See, now I'm mad. See, SMX is shoulda, woulda, coulda. That thing started at $3 the other day, popped up to here to 50. Oh, that's right, because it popped up to 52 in like a half a second. No wonder why. Oh, but on that day it was so obvious. Why am I such an idiot? Yeah, well, I guess the next one. Super duper busy day here, folks. Massive data coming out. Was it massive? I mean, not really. It's just we're just long. It's just the market's gonna go up. That's all. Straight to the morning. I hope it burns your eye. You just can't afford it, 'cause it's too damn right. Tossing and turning. Yeah, so gold is now up from when I liquidated 50% of my position. Knew that was going to happen. Gosh darn it. But that's okay, because I still own quite a bit. So, cheers to that. But I am hoping that we end up seeing gold to the price of, hold on one second. I will give my prediction on the gold markets and the silver markets in just a second. The idea is that we see gold go all the way up to $545, or wait, that wouldn't make sense. $5,445 an ounce. All we want to do is get gold into the +3, +4 standard deviation level. That would be awesome. Don't really know if it's going to happen, obviously, but it would be sick if we could get this all the way into +4. So we are hoping that we can get gold to get a euphoric run and get into, that would be another 35% up. That would be lit. So that's what we want. Let's check a weekly though. 1 second, 1 year week. Yeah, I mean, basically if we can get gold into here, then I assume that would be a euphoric blow off top, and then we would go into some sort of bearish move for a while. Looking at silver. Silver is booming, ladies and gentlemen, booming. We would love to see silver go all the way up into 70s. If we get to 70s, that would be sick. And then also that would probably be a pretty decent, at least temporary top. That's where I've been trying to get gold and silver to go to. But anyways, I liquidated half of my position here. Or well, yeah, in this dip. And hopefully we'll get the remainder up to there. And at that point, I don't even know if I would really sell my gold and silver, because I already liquidated half. So I'm like, would I really sell it all? I don't know. I mean, it's a question you always ask yourself. What's the point of investing if you're never going to make money? Which is, if you make money, you eventually have to realize the gain, essentially. You don't have to. You could just hold it for forever. But like I said, I liquidated half of my gold and silver. That kind of helped me acquire a new property. That way I could move out of the current property, which is debt-free, which would then allow me to generate about $30,000 in income more per year. So I was like, yes, it could go higher, but I could also secure a $30,000 pay raise by selling it. And so I went with the pay raise. So now I got to live with that decision. And now that I'm seeing gold is higher, I'm like, that one stings a bit, But what you gonna do? It's like, yes, could have used some cash from here or there, but then I'm just like, why not take the gain? Shoot, it was over 100% return on my silver, over 100% return on my gold, which is not easy to do on gold and silver alone. So had to, I guess you could say. Straight through the morning, the homers are right. You just can't afford it. You're still that bright. So yipperoo, yippee. All right, what else do we have to look at here this morning? Not a whole lot. I feel like we've covered the entire planet by now. What about the old Spy Magoo? Oh man, look at that. The kids are going to be just chirping about this bull flag here today. They're going to just, the YouTube videos, I can see it now. We got this trend line and we got that Slamming Magoo breakout. Hope it's handling now.
might be thinking you're...
Straight to the morning. Okay. Yeah, there's not much more to say here. Honestly, we might end the stream a little early. I do got a bunch of stuff to do. Like I said, I'm gonna be in Florida this next week, and my travel computer broke, and I was too lazy to go get it fixed. So I'll have to work on my smaller Dell laptop, which I already know the streaming function capability is going to be absolutely not good. But we'll try to manage as best we can. So arguably might be a little shaky start to live streaming next week, but we'll get her. We'll get her. So I'll catch you guys back next week. We'll do what we always do. We'll keep you on the right side of the markets pretty much every single day, it seems. And yeah, we're going to rock and roll, kids. So we'll catch you back next week. Make sure to tune in. And that's about it. Cheers. Have a good one. Like and subscribe or don't. All good. Love you. Bye.